Hello, I'm David Mandy, President of O&M Partners, and I want to welcome everyone to this Cisco Development Corp's Town Hall webinar. We certainly appreciate your attendance. Cisco Development Corp trades under the symbols ODV on the TSX Venture. For those new to these broadcasts, about 6 years before COVID, O&M recognized the sea change in non-deal investor marketing. A whole new generation of self-directed investors that can't be found only in the key financial centers. People are receiving information at home and in offices that used to be geared and available basically to professional investors. I like to tell people that, companies go public, but they are constantly also have to continue to go public, particularly with their non-deal investors. The questions of the Q&A are for everyone. This broadcast will answer questions you probably didn't know to ask. Questions can be easily asked by going to the question portal of GoToWebinar, or you can email us. Be assured that if your questions are not answered, we will be back to you in a timely manner. For those who dialed in with your phone, the only way you can hear the pre-recorded introductory presentation is on your computer speakers. If that's not possible, you'll be able to hear the main presentation after 5 minutes. So we ask you to please stay tuned. Before we turn to our host, I'd like to introduce our introductory speaker today, Paul Harris, editor of the Mining Journal. He's been a mining sector researcher, analyst, and reporter for over 16 years, focuses on the gold and copper sectors, and a real pleasure to introduce today. Paul, we'll turn it over to you.
2021 got off to a bright start with gold shooting about $2,000 an ounce before rapidly settling back to $1,850 an ounce, which seems to be a level it is comfortable with for the time being. With much of the world experiencing strong second waves of the COVID-19 pandemic and extensive lockdowns as a result, economic disruption continues, as do efforts by governments to ameliorate this through economic stimulus, such as the $1.9 trillion package the new administration in the US is looking to implement. With several COVID-19 vaccines starting to be deployed, there is the prospect of life becoming more normal as 2021 progresses. Some observers think this means that gold prices have peaked, as the gradual return to normal economic activity will see downward pressure on prices as investor confidence returns and interest migrates to other sectors of the market. Others view the bigger picture of mounting government indebtedness and the inflationary potential of all the economic stimulus as continuing to bode well for gold, with the prospect of prices pushing even higher going forward. Whatever your view, gold at $1,850 an ounce is boom time for the majority of gold producers, many of whom are enjoying margins of about $1,000 per ounce and are putting record amounts of cash on their balance sheets each quarter, paying down debt and ramping up shareholder returns via dividends and share repurchases in the process. But gold is a non-renewable resource. Deposits become depleted and new ounces need to be found and brought into production to maintain production levels. 2020 was a good year for gold exploration companies and developers who have found the equity markets open for much of the year and in a way that has not been seen for many years. Investors have tasked explorers and developers with being more aggressive in drilling their projects to rapidly advance them to resource definition and onto economic studies and on to mine build decisions, and they, by and large, have responded. However, investment has generally preferred safe and well-known jurisdictions, such as British Columbia and Canada, where there is a familiar and well-trodden permitting process, access to skilled labour and technical services, and infrastructure, such as roads and power lines already in situ. The exploration results out of British Columbia this year and last year have been considerable as the rate of activity has increased, which will help ensure that it remains a centre for new mine development. Gold miners want to build and operate mines in British Columbia, and consequently, the province has seen several projects advancing towards production as gold mines can be built in British Columbia, with a recent example being the Brucejack mine, and more mines will certainly follow. Higher gold prices have also resulted in some corporate restructuring as companies seek to surface unrealized value through the spin out of new companies, a process that typically establishes a resulting issuer with a hand-picked management, tight capital structure, funding route, and a specific project or projects to advance and develop. In short, everything necessary to be successful. The custom-built nature of some of these spin-outs means that they and their projects have been significantly de-risked and therefore have a very clear pathway towards generating shareholder value. For developers, now is a great time to be building gold mines. High gold prices mean development projects, by and large, have high potential margins and therefore very attractive economics, while low interest rates mean financing projects is very affordable. High gold prices are also reflected somewhat in higher company share prices, which means less dilutive equity financings to help finance mine builds. And for those looking for royalty or stream financing, the growing numbers of players in that space will only see terms become more favorable.
Thank you, Paul Harris, the editor of the Mining Journal. I really appreciated your introductory remarks. And now it's a pleasure to turn to our host, Sean Rosen, who is the chairman of the board of directors and the chief executive officer of Osisko Development. Sean has over 30 years of experience in the mining industry. As founder, president, and CEO and director of Osisko Mining Corp, he was responsible for developing the strategic plan for the development of Canadian Malartic Mine. He also led efforts for the maximization of shareholder value in the sale of Osisko Mining Corp, which resulted in the creation of Osisko Royalties. Mr. Rosen is an active participant in the resource sector and in the formation of new companies to explore for mineral deposits in Canada as well as internationally. Sean has, Mr. Rosen, he's been recognized by many for all his achievements. He's received the award from the Mines and Money of Americas for the best chief executive officer in North America. I've worked with Sean for many years and I can attest to that fact. He's also top 20 most influential individuals in global mining. So on that note, it's a real pleasure to turn the call over to Sean.
Well, thank you very much, David. I hope everybody can see me and we can see the screen here.
Yeah, you look good, Sean. Everything's good.
Okay, perfect. I also joined today by the president of Osisko Development Corporation, Chris Loader. Chris and I started working together back in 1987 in West Africa. He went off to have a career in the majors with Anglo Gold, and I went off to do private equity and to build the Canadian Malartic Mine. So just by way of history of the group, Dave summed it up well. Our calling card is we built Canada's largest gold mine by ounces produced per year, 700,000 ounce a year, currently owned by Yamana Agnico. We found that project for $88,888 in 2004. And we built it into one of the largest open pit gold mines in the world in 2011. Sold it to Yamana Agnico in 2014 and started Osisko Gold Royalties. And in that process, we acquired what we call the accelerator group of companies. And this Osisko Development is really the benefactor of all the work that went in to the first 6 years. And we've been involved in the Cariboo Gold Project, which we're going to present to you today. And this is what we're looking at today in terms of. Hopefully, I can get rid of these. Sorry, I seem to have closed the presentation somehow.
Scott, we're on that.
Yeah, I will take back presenter mode while you find it. There you go.
Okay.
Thanks,
So what we are in the process of doing, obviously, and can you guys see my presentation in full, or is there a screen over top of it?
Nope, it's in full.
Sean.
Okay, perfect. So today we're going to present to you the Osisko Development Plan. We've relaunched this company under the symbol ODV on the TSX Venture in November. 3 subsequent financings for a total of $205 million raised, all hard dollars, no flow through in that mix, for the company to advance, namely the Cariboo Gold Project in central British Columbia, and also a heap leach project that we have in Mexico. We believe we're on track to take the vision of this project, currently at 3.2 million ounces of measured and indicated, another 3.8 million ounces of inferred resources collectively within the company, and turn it into the next mid-tier, especially with a Canadian anchor. The Cariboo Gold Project is extremely important project in the space, as it's one of the few projects that we see that has probably 10 to 20 years of exploration left to go, even though we're already at a significant resource there with almost 6 million ounces reported to the market so far. In terms of our market cap, we're sitting at about $900 million, $950 million market cap today. Within the company, we have a $200 million of cash on hand, as well as $122 million in equities, giving us total liquidity of about 322 million Canadian, as we said today. So very well financed and no debt. So we're in perfect shape to launch what we think is the next mid-tier for the space, and also to highlight the value of the Cariboo Gold Project, which has a long and rich history, having started right after the California 49ers. It was a placer camp discovered in the 1860s, and mining has resulted in about 4 million ounces of gold being extracted both from hard rock and placer over the last 140 years. So we're the next generation to figure it out, and Chris Loader and his technical team have really cracked the genetic code of this deposit. And we're not dealing with just a project, we're dealing with a mining camp. This represents about 2,000 square kilometers of mineral rights, and also is situated over about 50 miles of mineralized trend that Chris and the team have been able to drill test and to map out in 2D along that longer strike. To put that in context, the entire Cortez trend is 51 miles. So this is a big deal. It's a big project. I'm not saying this is the Cortez Hill. I'm just trying to give you a sense of scale. And we think that there's a lot of ounces to be discovered here over and above of what we've done. And we've announced a 90,000 meter drill program, which is about 300,000 feet of drilling for this year. And based on the results that we get from that, we would continue on. And we think that we're going to be drilling here for many, many years to come. Currently have 10 drills on site, headed for 14, and then we'll hope to add to that afterwards. A bit on the enterprise value here, as we see on the scale, we're giving you a bit of a peer group review, and we've included Capex and to build these projects into production. Currently trading at 0.7. If we build it out, if we add the Capex to it, we get to about 1. But we're very much on the low end of the scale in terms of what the valuation of this project should be. And we think that we have a lot of upside, and for shareholders here today, this is a meaningful time to come into the project. We still have a relatively tight shareholder base, with most people having come in the recent financing, because the company was held 100% by Osisko Gold Royalties until the IPO. Cisco still owns about 76% of the company, and they're not trading the stock. So right now it's the stock that was issued in this financing that's available on the market. We're looking for this company to start out at about 275,000 ounces of production, with the Cariboo project coming into full production in 2023-24. And we also have some interim production that's starting right now with stacking ore in front of our 100% owned QR mill from our Bonanza Ledge project. So we hope to pour gold here in the second quarter. And we're looking for interim production of about 30,000 ounces a year during the permitting cycle to get to the 2022 mine build. In terms of what we're doing, we have the cash on hand to do a large part of the equity financing that's required for this project. We have the team to do it. We've been here and we've done this before. We built the Canadian Malartic asset. We've also been involved in about 13 different mine builds across the team. And we are currently working on not only this project, but the Mexico project to get this into production. In terms of our valuations here, we believe that if you go do a little bit of research, you'll see that it's quite an interesting company, I like to say that this project is a big company project with small company Capex at $444 million to build a plus 200,000 ounce a year mine with at least 12 years of mining on it. We think that this is a unique opportunity. A lot of that has to do with the existing infrastructure that's already in place and the equipment that we've been able to capitalize along the way. This next table shows an NPV to Capex ratio. And what you see here is the Capex based on percent of the market cap. So obviously very compelling in our case at 1.8.9 being the average ratio. We're well below that, and I think that capital intensity, sort of looks to the balance sheet, the need to issue capital through equity. So I think what we've got right now is we're in very strong position, and the company looks a lot like it will after we finish building the mine in terms of the balance sheet right now. We will take on some debt, but it should be paid relatively quickly because it won't be too much. The overall mine build at $444 million for phase one. If we take that into US dollars, about $320 million that we'll have, and we'll have a significant amount of sunk capital by the time we do get there. So all in all, we've given you another table of comparables today on overall ounces. We sit at about 7 million ounces total in the company right now, which puts us just below Orla, Sabina, Midas, and Hermitas. However, we are a 4 to 6 gram underground ore body with high grade pods to add to that, and relatively large mining widths for an underground mine of this size. In terms of our development capex, as you can see, we're showing about 350 million US here, Canadian dollars here, but we've upsized that from 4,000 tons a day to 4,750, and we've included all the other things that we think might have to go into infrastructure to get to that larger number. In terms of Osisko Development's position in the life of mine average price, you can see we rank quite well here, and we're on the process right now of seeing how and how much effort we can put into expanding our existing resource and ramping up. The advantage we have is we are ramp access, relatively shallow as we get into this project, and we'll talk about that a little bit later on. The next slide, I think our presenter that introduced covered it off pretty well. In terms of bullish factors for gold, $277 trillion, or 365% of global GDP, sitting in the world's total debt at this point in time. Total public debt in the US now just a tick under 28 trillion and 23 trillion as of 2020. So this continues to climb with the complications that we all see in COVID-19. This risks to continue for a while, and especially if this virus mutates, and I sure hope it doesn't get any worse. But we have to assume that the world's going to have to pay the bill no matter what it is. So these things are our force as we go forward, and the indebtedness of all nations and the risk of fiat currency devaluation is significant. Everybody's trying to sell their pots and pans to each other, and if your currency is too high, you won't be able to transact. So we have a bit of a devaluation race underway, and that's always an interesting time when the Western world decides to devalue against itself, and certainly China can't afford to have an expensive currency right now. All this bodes well for gold because, as we know, there's no dilution in gold other than what we bring above ground by mining, which is traditionally an increase of supply of about 1.2% per year historically, but getting harder and harder to do as the shallower, easier to mine gold deposits are all coming to their mine life end. In terms of global liquidity across total assets, I won't get too much into this slide because I want to stick to the presentation, but more than happy to speak to that in the Q&A period if we get there. Our focus really is the Cariboo Gold Project and the San Antonio Project in Mexico. For free in the portfolio, we have a large land package in James Bay that surrounds the Newmont Eleanor mine that we acquired when we bought Virginia Gold. We also have a large land package near Guerrero that surrounds the Torex and Equinox Los Filos mines in the Guerrero state that we have some options on. We'll be looking to probably joint venture out those two exploration packages while we focus on the Cariboo Gold Project, currently sitting at measured and indicated at 2.9 million ounces of 4.7 grams, which is fully diluted for mining widths, and another inferred 2.5 million ounces as we move forward here. So all in all, you know, we're dominantly, I would say 2/3 to 7/8 of our value sits at Caribou right now, and we have a nice easy project in Mexico called San Antonio that we'll get into a little bit later. But it's a 1, 2, 3 process for us to build value and get the share price moving now. First production is expected, as I said, at the end of Q1 or early Q2 of this year from Bonanza Ledge. We previously mined there in 2018. We carried out test mining, produced 22,000 ounces there. We're currently have an underground development program that has 60,000 ounces ready to ship to the mill, and we're just in the final permitting process to release the mill here this month or this quarter and get that into production. The San Antonio project is a low capex, about $25 million US, heap leach operation that we acquired. It was previously a copper project and was tied up in some litigation. We spent about 2.5 years and we were able to liberate it, and we're very excited about this project. It's quite high grade. It's about 1.2 grams a ton for about 1 million ounces, all open pitable, with the oxide component getting plus 90% recoveries, and even the transition and sulfide zones getting into the 60% recoveries. So, you know, we all like our yellow dump trucks. This is simple mining, really low capex for what we're getting out of it. And there'll be more to come in the presentation on that one. Of course, the big show is number 3, production to start in 2023 at the Cariboo Gold Project that Chris and Maggie have been leading the team in terms of getting us the resource infill drilling there. And the permitting track is well along as well, with IBAs having been signed with our First Nation partners and our host communities. The mill, the bulk of the comminution circuit, the crushers and mills have been purchased. So we have quite a bit of visibility on what we're doing. Here on the left-hand portion of the slide, this is the exciting part for us. This is 2,000 square kilometers of mineral rights. So, you know, that, to put that in scale, that would be like owning the entire Timmins camp or the Val-d'Or camp or the Red Lake camp. You know, this is a huge land package to own, and we own it 100%. You know, with our partners at Osisko Gold Royalties, we've been able to secure the land. And as you see in the insert here, we're quite well advanced with an underground ramp into the project. We're advancing about 7 to 8 meters of underground development per day as we speak today, and a significant amount of infrastructure in place already. As we say, this is a brownfield site, and it's also a logging site, West Fraser. The local logging company has carried out clear-cut operations in almost all the areas that we work, and Chris and his team have been successful in getting more than 3,000 drill site permits permitted, which is quite extraordinary. And that is because all the land is, for the most part, where we're working, impacted. As you can see, we have a portal, we have underground operations, and we also have the QR mill at the bottom right, which is about a 1,000 to 1,200 ton a day mill, depending on rock hardness, that we recently did a refurbishment on, and we're looking to start that mill back up in March. And we should be able to run about 600 to 1,000 tons a day from our current underground operations while we get ready for the big show, which will start in 2022 with the construction of a 4,750 ton a day operation underground. In terms of how it breaks up, you know, we have this Bonanza Ledge interim at about 5 grams a ton for the next 2 years while we're in the permitting and construction mode. We'll be able to run this mill and hopefully create some strong cash flow. And we also have a significant amount of exploration outside of that 60,000 ounces in the current mine plan. The overall resource in this area called Bonanza Ledge is over 400,000 ounces, closer to 500,000 ounces, and we really just stopped drilling on it while we focused on the bigger project. In terms of annual production, you can see here we have year 1 at 77,000 ounces, year 2 at 193. This is based on our 2019 PEA study that we published and assumed 2 million ounces of reserves, and it was also operating at 4,000 tons per day. We're currently online to permit at 4,750 tons a day. And Chris and the exploration team are doing the infill drilling right now with the 10 drills to get us to 3 million ounces in the mine plan, which will set the stage for an increase in that annual production expected. So a lot of value drivers going into the project over the next 12 to 18 months. So in terms of what we're doing here, we have a developing mining camp, and this cross section is really, quite an extraordinary piece of geology that Chris and the team have gone a long way to understanding, and by understanding it, they've been able to do predictive drilling in terms of knowing where to drill and hitting what they expect to hit. So maybe I'll stop here and I'll pass it to Chris to give a little bit of an overview of what we're looking at on this cross section. Chris, is your audio on?
Yeah, can you hear me?
I can.
Okay, good. Hi everybody, I'm up here in Wells at our Cariboo Gold Project. And yeah, this catalyst event that took place in 2016 for us and the Cisco group on the project was really breaking the controls of mineralization, understanding what was controlling it, and as Sean mentioned, making it predictive. So we went from a very low hit rate in our drilling, sort of 20%ish, to about 80 to 90%, and we've maintained that ever since. The real potential here is just that the predictability of it is along that whole trend that's shown there, the existing trend, and then now on the new parallel trend, which we identified 2 years ago. There's hundreds of targets yet to drill along here. They tend to repeat every 500 to 800 meters, these mineralized zones, and they tend to be somewhere between 500,000 and 1 million ounces down to about 3 to 400 meters depth. So there's a lot of potential there. We have drilling in below these zones of our resources right now. What you see there in that long section in our core zone is down to about an average of about 350 meters. We have approximately 6 million ounces there, 5.9 million ounces. And we've drilled down for another 300 to 400 meters below that with substantial amount of drilling now, not to a resource level. We're still working on that, but just there's a potential to double that only in the area there, and not even talking about along the trend. So that's why we've called this thing really a generational project, because it'll be around for generations. This is a really unique opportunity. We have good access. We have a strong understanding. We have all the mineral rights that you need here. Everything's controlled by us. And we've got strong community support and First Nation support here.
Thanks, Chris. And in terms of what you see on your map, the only real intense drilling that we've done so far is in this green area in the box, and it represents about 3.7 kilometers of intense drilling out of an 83 kilometer long total trend between the existing trend and the new parallel trend. So all in all, Mr. Loader and the exploration crew are going to be at this for a while now. Next slide here shows you the site overview and where the mill is going to go. There was a previously existing mill on this property that was removed in the 1980s. We're reestablishing our new mill on the brownfield site to reduce our footprint. In terms of our ESG, this project will be a crowd leader in terms of what we're trying to achieve in our footprint management, the technologies we're deploying, and the integration within our community and the surrounding areas that we're working on. We're going to be working with a local architect, First Nations architect, that has come up with several concepts, and we've got a lot of our footprint is actually underground, and we're reduced it to the existing footprint. And as you can see in this area, this is the old tailings area here. We'll be encapsulating that at some point in time. And our main area of footprint here will be going back underground with almost all of our tailings that are created by the flotation circuit. And then the sulfide component, the concentrate, will be shipped to our existing QR mill. So we'll reduce the need for an on-surface tailings pond from this mine, which is quite unique. And we'll be using the dry stack tailings to rehabilitate our QR mill site that is fully permitted and has a tailings pond, as well as a cyanidation license. What that does allows us to build this mill without a tailings pond in first generation, and without the need to put cyanide into the circuit, as we're just using a basic crushing, grinding, flotation as the main milling method. We do, however, have a unique thing that we're doing in the front of it, which is called ore sorting, which is very environmentally friendly as well, because it sorts the ore in a coarse fashion. The rocks are more than 3/8 of an inch in size, and by using X-ray and some optical review, just like the X-ray machine at the airport that looks at your bags, we X-ray the rocks and we select the ones that have sulfides in them, because almost 98 to 99% of all the gold in this deposit is associated with the sulfides. So it's a binary selection. Any piece of rock that has any sulfides that are ping on the X-ray are sent to the ore sort, and the other rocks are sent to the waste side. And the net result of that is it rejects about 25% of all the material that we mine without us having to grind it into tailings. And we're able to dispose of that material knowing that it has no sulfides in it, so it's not acid generating in our development waste. So that's why we don't have a big tailings pond, is because we're rejecting 25% of the waste with this new technology. It is extraordinarily economic. It costs us about $1.50 US per ton to process through the ore sorter. And we only use the ore sorter really on 50% of the material that we're mining that is lower grade. All the higher grade material that we do produce goes directly to our flotation circuit, a well-known technology that everybody I think is familiar with. We produce a concentrate that gets shipped to the other mill that runs somewhere between 28 and 35 grams. And obviously it will be higher in some places as we get in some of those high grade zones. As you can see, we've introduced underground crushing and we've kept as many things from surface as possible as we develop this project in our new ASG model. What you see here is the QR mill. So we're taking advantage of this existing mill that was built by Kinross back in the 90s. We've updated this mill. It's a pretty good mill because it now has the flexibility to do both CIL and CIP processing. And the difference there is that you can handle ores that may have a little bit of graphite in them. It was engineered as a 1,000 ton per day mill, but depending what you put into it, you can get more. So having this mill in the project obviously gives us huge advantage. We also have an assay lab here that we don't have to capitalize this component of the project, and allows us to get into production right now as we speak. So we'll have some cash flow from this project as we go forward. In terms of what it does for us, obviously, you know, we're going to be able to process our concentrates there, and also it gives the community and everybody the knowledge that we use our existing infrastructure rather than just creating all new. The other thing that we're doing with this project is on page 18 here, is we're trying to go all electric, and I think we're going to achieve pretty close to 100% electric. All of our drilling equipment will be electric, and what you see here in the right-hand screen is a technology that has been used in tunneling and other softer rock areas called road header development. And instead of having drill blasts, we're actually able to cut the rock with this machine because we are in Jurassic age rock here, which are a little bit softer than traditional gold mines. And this machine operates as about a 140-ton machine, completely electric, and it runs a significant amount of software and allows it to mine while we're on changing shift. While we're, you know, it doesn't generate any explosives, so we don't have any ventilation break when we can't mine while we're waiting for after blast to blow out. And it also reduces the amount of contact water that's contaminated with the drill blast cycles of ammonium nitrate and anything that we might be putting into that contact water by just having a purely mechanical mining method with no explosives involved. So that's going to be quite useful for us. We're doing traditional longitudinal retreat with long hole stoping, so nothing out of the extraordinary, no new technologies per se on the actual mining method. Just the equipment that we're using to execute that method has been modernized. So we're looking at, you know, what I would call the ore multiplier stage here, where we're mining at 4,000 tons a day in our PEA study. We'll be bringing that feasibility study back to you, as we say, in the summer of 2021 here in late summer. And we'll be showing you the ore sorter technology. The advantage of the ore sorter is we get about 50% rejection of everything we put in there that we know is barren. So if we put 3 grams in there, the product comes out at 6. If we put 4 grams in there, it comes out at 8 grams. And then when we use flotation, we increase the grade by a factor of about 4.5. So we produce, we'll go from mining 4,000 tons a day in this model to mining 500 to producing 500 tons a day of concentrate, which will contain all of the sulfides. So that means that 3,500 tons doesn't have any contaminants or potential acid generation components to it. So it's quite an extraordinary mine from that standpoint. We're able to produce a very clean waste product as well as in a very economic process. And as we are all more focused on ESG, I think the fact that we're able to contain the sulfides and reduce the amount of material that we're turning into tailings significantly in this project. It's the first one of its type that really does this. And I think that this will be a leader in the mining industry, much like the similar when we did in Canadian Malartic, where we did the continuous closure plan and we encapsulated the historic mining waste when we did that project and cleaned up about a $400 million problem with a new project. We're also looking at using our product here, which is going to be clean, to clean up and encapsulate some of the historic mining that was left there from past generations. The ore sorter here, I've covered a lot of this. I say it's an increase in grade, by about 100% in terms of what it rejects on the portion, and half of the ore goes direct to the flotation, so half of it goes to the ore sorter, which is why we have a net effect of reducing all the mine waste that goes into the tailings pond by about 25%. In terms of processing requirements, power, and everything is also reduced by this methodology. We are in the process right now of hitting several milestones in the development of this project, which we believe are catalyst to value building. And we've given you a bit of a summary of the history here. We really started on this project in 2016 with some exploration, trying to figure it out. The aha moment was really in 2018. And then we had finished the acquisition of this project by buying out Eric Sprott at the time. And then we continued on with the drilling. We've executed about 650,000 meters of drilling to date. And we've executed quite a bit of the permitting cycle, and the engineering and conception of the project is well advanced. And the vision for the study was to go from 4,000 to 4,750 tons a day. Because if we go past 4,750 tons a day, we'll step into the federal permitting process, which we don't want to do at this point in time. So all in all, we're coming along quite well. And as we say, the vision for the camp is what I'm hoping is going to be 5 to 10 underground mines with a central processing facility. And we're really focused on what we've called the 10, 5, and 3 strategy, is do enough drilling to get us to 10 million ounces of resource overall, get to a plan to put 500,000 ounces of gold production in evidence over the next 5 years, and to have 3 million ounces of mineable reserves in our feasibility study by the middle of this summer. So all in all, these things are quite doable. And as long as we are not too affected by COVID-19 this year, we should be able to accomplish most of our goals that are required drilling. And Chris has been leading the charge to make sure that we have the infrastructure and the ability to create a drill program of this scale. For those of you who may not know Cisco, we have an internal policy which we call SUDS, which stands for Shut Up and Drill Stupid, because we believe all wealth is created at the drill bit, and mine development and mining is really a de-risking operation after you've discovered the wealth. So we continue to push hard to be one of the big explorers in terms of brownfield exploration, and really to dominate these camps and unlock value for our shareholders by doing projects that will matter. This considered world class is about 6 million ounces. We're there now, and we want to get to that 10 million ounce mark as quickly as we can. We have the targets and the drilling. Mostly what we need to do is to drill below the existing resource to get us there. And Chris and his team are well underway to doing that. a bit of the timeline as we got so far to this. And really 2021 is our kind of our transition year as we get back into production at Bonanza Ledge, and we add the rest of the drilling to get the feasibility study. We've already purchased, as I said, a 7,500 ton a day circuit that we'll be implementing in this new mill build. We'll commission it at 4,750, but obviously we have more capacity, assuming that things will continue to evolve. In our ESG program, we're quite proud of this. For those that may not know the Osisko Group, we've always had a big ESG component. Back when it was called sustainability, we were leaders on the Canadian Malartic development in terms of what we did for our community to make sure that we left a footprint that the town and the community would be much better off for having had the mine, even if the mine did close down. We created a permanent infrastructure around that. We also created an educational place for a lot of people that didn't really have access to that by being significant investors in training. We'll be investing in training with our communities here as well, and we're in the process of starting to build miners and geologists and explorations on a local basis as we get forward. For those that may not know it, the town of Wells has a permanent population of roughly 200 people, and it's been around since the mid 1800s. But as we grow, this will become much more bigger component of the town than we are now. We currently operate a camp there of about 150 people between camps and hotels and various houses that we own throughout the process. The permitting is obviously a big sensitive subject in British Columbia. Surprisingly, BC has been permitting significant amount of mines, with Silvertip having been permitted. The Brucejack is obviously the biggest one that most people know about. Their permitting process was quite quick, actually. I think it was 11 months from the time that they went through it. We've already attained several milestones in the permitting process, having deposited and gone through the bulk of the public hearings, and also obtained an IBA agreement with the Latako Dene First Nations. They've had IBAs in place for exploration, but this is a fully baked IBA to go all the way through to the production portion of it, and they've been very supportive and vocal in support of us, both to the local government and also to the provincial government as we move forward. As you see in the bottom picture, we see Chief Clifford on the left, and we see our Vice President of Sustainability, Chris Farness, on the right. And he's a very active guy and does a great job making sure that our community understands what we're trying to do and that we understand what their concerns are and we integrate them into the project. This is a great picture. I always love this one. It gives you a bit of a feel for this classic old town. It is a heritage site in British Columbia, the town of Barkerville, about 19 kilometers away. And we've been very involved with that community, with Chris being on the Heritage Site Board of Directors, which is called the Barkerville Heritage Site. And I suggest anybody that's interested in history, go and have a look at their site. It's a large town, has about, I think, 180 full-time actors in the summer. And it stagecoaches and all the buildings that you would have in a mid-1800s gold mining town. It's quite a cool place to visit as well. Very good for children. A lot of school children in British Columbia end up visiting there. So we're being integrated with that project, and we're being complementary, and we hope to have a joint venture with the community to demonstrate, old style of mining from the 1800s and then up to date here, where a lot of the mining work and the equipment that we operate looks more like a video game that this generation would understand, with everything being operated by remote control, often from surface. So the transition from then to now is really something that we think is going to be a benefit to shareholders. And also in our ESG component, this will be a showpiece for the mining industry in terms of what can be done with a mining project. And you see the community here in front of the Wells Community Hall, and this building is well over 100 years old. Not that old if you're in Europe, but if you're in central British Columbia, it's quite old. Moving on to Mexico now, the San Antonio project, the latest project to our portfolio. Really quite a good find. Was identified by our team about 3 years ago. It's taken us that long to effect the ownership of it. We paid about $45 million US for this project, and it was previously in bankruptcy, and we went through quite a process to clean that up. We now own it 100%. We have 1 million ounces grading 1.18 grams. To put that in context, the average grade that's being mined in heap leach in Nevada right now is about 0.42. So it's more than double the average grade that's in production in Nevada right now. And we've been intimately involved with the heap leach operation construction at Victoria Gold, where we led the financing there. And we put up $175 million to get that heap leach up and running, which is now running at 30,000 tons a day and on schedule to produce at 200,000 ounces a year. That project is in the Arctic. It's at 64.5 degrees latitude, just a little bit off the Arctic Circle. We're much warmer here. We're an hour and a half from Sonora, and we're located about 100 miles from La India, and we're also not too far from Mineral Alamos' Santana, where we're a 19% shareholder, and also Alamos's Mulatos project is on the ski, and to the west of us, you can see the Argonaut Gold Project, La Colorado. This is a well-known mining district and a big mining culture. Production outlook, we were looking for 50 to 70,000 ounces a year. We just put out a press release about 3 days ago. We've secured a 15,000 ton per day semi-mobile plant made up of top quality equipment, Metzos and everything else. It's being refurbished in Nevada. It came from the Britannica mine in Nevada. It was built in 2014, and we're sending that down to Mexico so that we can fast track this project. So obviously, if we're capable of using that equipment to its fullest, we would be significantly more than 50 to 70,000 ounces a year. And we'll come back to you as soon as we get our drilling done to make sure that we can confirm what those new numbers will be. But we really see this as early cash flow, early mining for the bank. And again, super low capex at $25 million US, to put 50 to 70,000 ounces into production, almost unheard of. But a lot of infrastructure on this project, in that it was a previous producer. A little bit of a footprint here. So the big prize here is the Sapuchi zone, as you can see in yellow. This project is headed for production right now. Some drilling on the go, and we're just going to leach that down on the gray zone here where it says proposed leach pad. You can see the infrastructure that exists there already. This was an SXW copper leach plant, so we'll be converting it to gold production. But all in all, things are going pretty well here, and we've set the table for what we think is going to be a really simple to understand, straightforward, with a relatively safe and easy to access infrastructure. Both the San Antonio projects and the Barkerville project, the Cariboo Gold Project, benefit from paved roads, power, and communities not too far away, and communities that are mining supportive. So all in all, I think we brought the band back together again. Chris Loader is leading the charge on the exploration and drilling. Luke Lassard, who was our chief operating officer in Osisko Mining, is going to lead the charge here as our chief operating officer on the mine build. And we brought to bear $200 million of capital with no debt on this project and significant amount of infrastructure and equipment already paid for. So I think it's a pretty good summary of where we are. David, I will stop it there, and thanks everybody for listening, and look forward to hearing your questions.
Thank you, Sean. Great presentation as always. Let's start with Mike Hahn. Mike, good to have you on the call with us. Questions today? There's always a slight delay with unmuting, so.
Yeah, just a reminder, panelists, you have to unmute yourself by clicking on the grayed out microphone icon.
All right, Scott, let's go to Murray and then we can come back to Mike. Murray Vanderbilt. Questions today, Murray?
Trying. Did I get it? Where'd it go?
Yep, we can hear you, Murray. All good.
Okay, good. Well, so first of all, having been a long-time investor in Barkerville, we always knew there was gold there, but nobody could figure it out. You guys have done a wonderful job, I think, of putting a program together, and I want to thank you for that. Well, it gets pretty exciting, and don't really have a lot of questions. I'm just going to sit back and enjoy it for the next couple of years. But I guess maybe one question. It was so spread out. I mean, they knew it was there, but nobody could figure out an economic way to put the package together and make it work. And maybe you can just, and in the original PEA or even in the updated one, have you got any thoughts about what the cost may be coming out of Barkerville, the ASIC cost? Or I know it's a little early because you haven't the final one, but maybe you could just touch on.
Well, you know, we are aiming to provide competition to Netflix in terms of making sure you have lots of drill results to look at over the next few years. There'll be another channel besides Netflix. It'll be Cariboo Gold, and be featuring our star geologist Chris Loader. In terms of the overall vision for the project, it really came out of the work that Chris and his team did in the early times, and maybe I'll let Chris comment on how we managed to crack the code here.
Yeah, it was an interesting iteration, if you want, that we went through. And the most compelling thing that got us there was really access to the old underground. There was surface drilling. There was kind of a haphazard approach to exploration due to the postage stamp type mineral rights that existed prior to our involvement in it. But getting underground and seeing the connectivity between what we call our veins or our vein corridors that then develop into stopes for mining is what was a real thing. We realized it was related to a single event, a geologic event that was mappable on surface and the drill core. And with that, we were able to then go all along the trend and see these areas we had to drill. We started drilling those, and that was really what gave us the confidence and was a catalyst to our investment as Cisco back in 2017. So, and that's led to taking it private 2 years ago and then bringing it back on the market last year. So that was it there. I think you asked a question about the all-in sustaining costs and that. Yeah, we've put in our PEA some of our early costs in that. Sean, you want to comment on that, or do you want me to comment on it?
Yeah, I mean, we put updated costs in there, and those costs will be updated in the 2021, looking for late summer updated costs. But I believe, Chris, we were at about $800 all-in sustaining costs.
That's correct. In terms of US dollars, that's what we are.
Yeah.
Is that with the new sorting techniques you're going to be using?
There was an assumption of traditional mining. We didn't really have the road header in there. We did have the ore sorter in there, but not as big a component as that. And we wanted to make sure that the economics stood up as a traditional mine without the use of the road header or the ore sorter. But the ore sorter is included in that number. But I think it's going to perform. Hopefully, it'll perform better than the assumptions that we put in that PEA study.
So it should give you confidence that 800 number is a pretty solid number.
Yeah, I mean, I think that the scale of the project, where we see upside here, is obviously taking more advantage of this road header to bring in some ounces that are going to be accessible, and we really sort of distinguish, the ore sorter ounces being things that are already, we've done drift developments in, and we're just taking that material and we're upgrading it for $1.70 a ton, $1.50 US a ton, rather than drifting into lower grade material. So we were pretty disciplined, I think, in terms of building the mine plan around easily deliverable numbers. There is quite a bit of upside to be had once we get underground. There's several types of mineralization that we didn't include in the resource because it was too hard to drill from surface, but there's some high grade replacement zones and that sort of thing that offer some jewelry box opportunities that are not included in the current economics.
Well, thanks again, and good luck going forward.
Yes, well, stay tuned for season 6.
Yeah, we'll go.
Thanks for, as always, for your presence, Murray. We're going to turn now to John Hummel.
Oh, I'm sorry. I did get a question sent in from Michael Hahn, who was having microphone trouble. Do we want to do that?
Right.
Or?
Yep.
So Michael's question was, I know one big advantage is the shallow depth of these various deposits, but what is likelihood that you don't just have gold along the 80-kilometer trend, but at depth as well? Can you talk about the isolated deeper drilling you have done and the results? Do the grades improve with depth, and what are geological comparisons with other deposits?
I'll let Chris have a go at that one, but obviously at depth, we haven't seen any end of the mineralization yet.
Yeah, we've been drilling, we approximately now got 49 holes at depth below any resource, down to the deepest being, I believe, vertical depth right now is about just shy of 1,000 meters. And we're still hitting the predicted vein corridors, eh? So those were, we predicted where they would be at that depth, and we punched down there, and we've crossed those zones and hit the mineralization at similar grades. Your question is there higher grades at depth? You see a general uptick a bit, but we don't have enough drilling yet to statistically say that yet. A year from now, when we get more holes underneath there, I'll be able to answer that question better. Comparing this to other deposits in the world, these orogenic systems are hosted in metasediment, so you compare it to things in the Victoria gold fields in Australia. You can compare it to the things in the Brunswick area and in eastern Canada, the gold deposit of Coringal in Northern Ireland, which is Dalradian Resources or Ryan Mining now. Those are very similar. There's also some similarity to some of the deposits in New Zealand too, within the metasedimentary packages there too.
Thank you. And I know John had another question that he'd like to ask.
Do we have John Hummel? Is this Mike's question or John's? I'm sorry. Mike Hahn's question?
This is John Hummel's question now. I'm sorry.
Okay, got it. Great, thank you. I'm sorry.
I apologize. What do you envision doing with your 76% ownership? Keep, distribute, or to OR shareholders, or sell?
Well, the advantage of having OR as a shareholder is it's a very healthy company. Osisko Gold Royalties makes about $150 million of revenue per year with a 91% margin. The goal with the equity book was always to make sure that we took advantage of the knowledge and the technical ability of our teams and to protect the asset long enough to unlock that value. Certainly, in terms of the strategic value of that deposit, of that equity position within OR, there's a few things that can be done with it. We can use that to bring in another strategic shareholder in a secondary where we want to see another group come to bear and bring another deep pocket to the table. We can also use that to trade for other assets and resources that may be interesting for the group. As we know, in the royalty and streaming and project business, there's a lot of cash around, but there is not very many good projects. So this is another trading chip that OR has, and also complementary to what we're trying to achieve at ODEV, which is to set the table for this to be a 500,000 ounce a year intermediary with eyes on going higher than that. In terms of where OR sits strategically, this is pretty important to us, and we want to see this project developed and see the vision that we have on it, which is it is a gold camp. It needs to have multiple mines in it. So there's no particular rush to do that, but for strategic purposes, we have a lot more flexibility to pick and choose the partners that come into this project as we move forward. And I think it's goes to the quality of the market cap that's out there, the quality of the shareholders who are invested with us. The institutional, with the first $140 million we raised for this company, came out of the long only who's who in the gold space. So it's a very good alumni of shareholders that have been with us in the past, and they obviously back this play in a large way. And they're also shareholders within OR. So within the next level of shareholders, we have quite a bit of support to see what happens in this in the evolution of Barkerville.
Thanks,
Thank you.
Scott.
Yeah, thank you.
Let's, Howie Flinker, let's try Howie if he has a question. He may or may not. Howie, question today?
I have no questions. Hi, Sean.
Hey, Howie. Well,
Thanks for-
you know, I invite you up the site, but we're not going to quite make it this year.
Thanks, Howie. Being on the call, we'll turn to Heinz Thoma.
Can you hear me?
We can indeed, huh?
Excellent presentation from the big boss. That you are in charge of this project shows how important this is for the company. I'm very pleased. Do I understand it correctly that by about 2024, you might be passing the 200,000 ounce per year production? Or is that too
Yeah,
early?
certainly the hope. You know, we'll be in construction in 2022. 2023 will be a commissioning and ramp up year. The way that the schedule is working right now, we're hoping to have a full construction release late summer 2022. And we need probably around 12 months to get the new mill construction complete. But we'll be in production underground as we get into that. So that puts us sometime, you know, commissioning the mill in the second half of 2023. I think we show about 72,000 ounces in that portion of the year, and then a full year of production north of 200,000 ounces is really the goal for 2024.
Okay. Thank you very much. Good luck.
Thank
Thanks
you,
very
Heinz.
much. I'd rather be lucky than good any day of the week.
We're going to turn to George Belker. George, question today? Just a moment of patience. I'm trying to get George unmuted. Shall we move to Doug Loud, Scott, and then we can come back to George?
Yes. Hi, very interesting presentation. Two questions really. One is, it sounds like you have your permits well in hand, as long as you don't run up against this federal limit of 4750. And the feds change the limit on you so that you wake up with, say, 4,000 and you're in trouble? And if so, what would it take to get above 4750 in terms of getting new permits from the feds?
Well, right now the limit is actually 5,000, so we stayed away from the 5,000. And this is a relatively new level. They increased it from previously, I think it was 2,000 to 5,000. And I think that, you know, the federal government at this point in time, you know, is demonstrating that they want to support new business opportunities. And within British Columbia, we certainly have the support of this government. At the roundup last week, we had some very positive words about the Cariboo Gold Project from the Premier and the newly elected NDP government that was in power as a minority government up until October 25th, and then got elected with a very strong majority government, has another 4-year mandate. They've made no bones about it. This is a high priority project for them. It represents jobs in an area that's been economically hardshipped over the years, and all signals from what we see are that this project, because of its low footprint and its ESG approach, has got more support than any other project I've been involved with for a long time. I'm not even moving the town this time. You know, last time I had to move 250 houses.
Yeah, I remember. Thank you. My other question was, these different projects, especially the ones in Mexico, are they in separate companies so that you can spin them out or pass them over to the shareholders without getting into trouble with the Canadian tax authority?
Yes, they are. I mean, Sapuchi Mining as an entity onto itself, a wholly owned subsidiary of ODEV. But you know, I tried to be a tax lawyer at some point in time, but I found out I'm more of a miner. So I will do the best tax planning we can if something like that happens. But typically in Canada, if you work with a plan of arrangement or a spin out, you can spin those things out without too much tax burden, but there's always some leakage.
Okay, thank you very much. It's really very interesting.
Well, thank you. I think we're going to be a pretty exciting story for the next 5 years.
Looks like it.
We're going to turn to our Atlanta investors. Doug, is Dr. Wood still on with us? Dr. Wood?
Yes, I'm on. Every time, Mr. Rosen, every time you give a talk, it's fantastic. And today's was just better than ever. You know, very impressive. I came in through your Brett Resources acquisition into Osisko Mining and then on to OR. And, you know, I'm just very, very happy about how things are going with Barkerville and very impressed. And I just enjoy your discussions. They're so meticulous and I love suds. I'm going to remember that. Thank you very much.
Well, we try to keep things down to things we can remember. We are, after all, engineers and geologists.
Thank you, Dr. Wood. We'll turn to Chesley Morton. Chesley, questions today?
Thank you, David. First of all, great presentation. I didn't quite get it from the presentation, but is this strictly gold, or are there other economic minerals involved in the two BC operations?
It's dominantly gold. There is a little bit of other stuff, but generally I'd say 98% of the economics are coming directly from gold.
Okay. And a rule of thumb, I guess, on diesel operations is that energy might be 20% of total cost. Are you achieving any kind of economies with the electric operation?
Yeah, well, British Columbia has a huge hydroelectric endowment, and we're going to be benefiting from those power costs. I don't have the exact cost that we're going to be at, but you know, when you generate diesel power for electricity, you're somewhere between 28 to 40 cents a kilowatt hour. British Columbia ranges anywhere from 3.5 cents to about 8 cents, so a significant amount of savings. There, we'll be taking advantage of that. There's also significant amount of tax incentives and programs that allow us to do this. You know, much like when you buy a Tesla, you get several credits. If we can stick mostly to electric equipment and push the edges of technology forward, you know, we get those benefits. The other thing about going electric is if you're not putting diesel underground, you don't have nearly as much ventilation to deal with. So you know, there's a lot of upsides to being very electric, and the new electric equipment is extraordinary in terms of how much torque and strength it brings to the table.
Absolutely. Interesting. I look forward to the news flow. Thank you.
We shall drill a lot, sir.
I want to, before we proceed to close,
David, I'm sorry to interrupt you. I did notice that I think George might be online. George, can you hear us?
Okay. Let's go to George. George, question today?
Maybe I misspoke.
No, well, he's unmuted, so
Yeah.
just a moment. George, are you with us? Okay, we'll get George's question and report back to you on that, Sean. I wanted to point out to our generalist investors that as the news flow comes out from the story, Sean will be doing 6-minute CEOs to explain, you know, the technical to our generalists. So please, when the news comes out, please look for the 6-minute CEO to get an explanation from a high level without all the technical terms. I'm going to turn it back to Sean for closing remarks.
One thing I did want to add is that, you know, we've taken the COVID-19 crisis and we've installed our own test lab on site. So we've taken it very seriously. And we've tried to secure our community and our mine site as best we can by introducing a lab that gives us test results within 2 to 5 hours. And nobody's really allowed into the property or onto the site unless they pass a test and we get real-time results. So it was an investment of about $500,000, but it's gone a long way in terms of securing our community, our workers, and you know, that is, I think it goes to the way we think about things, is we want to be the best in breed for each and everything we do. And I really thank everybody who supported us along the many adventures in the Osisko story. Certainly Barkerville and the Cariboo Gold Project are going to be a significant amount of value creation, as well as I think a lot of good fun for shareholders as this project starts to drill out and we see what the drill bit brings to surface here. This may be one of the greatest treasure hunts any of us have ever seen. So I'll sign off there, and thanks everybody very much, and stay safe.
Thank you, Sean. And I also want to thank Chris Lauder for coming on today, the president, to talk about the geology. Again, want to thank everyone for your participation today, and wish you a very pleasant evening. Take care.
Thanks, everyone.